Hi everyone. Welcome to Week 5 practice exercises. Today we'll talk about 5 things: preparing a cost of production report, journalizing process costs, determining the changes in cost per equivalent unit, identifying those common causes for changes in the cost per equivalent unit, and finally we're going to evaluate how changes in inventory management assumptions impacts the cost of production report. So let's go ahead and get started. You can see here on the screen that the green boxes are the information that we're given in the process or in the problem. We have information regarding the work in process for July 1st, any materials, direct labor, factory overhead that was transferred into the sifting department, and then we're given other information such as how many units we completed and also what the work in process is on July 31st. So let's go ahead and get started with the first piece of it. White Diamond Flour Company manufactures flour by a series of 3 processes. The first is introducing the wheat grain to the milling department. Then from the milling department, the materials go to the sifting department, and then after the sifting is done, it's transferred over to the packaging department. We're told that on July 1st, we have direct materials and conversion costs. They're listed here, and they provide us the units and also the cost per equivalent unit here for direct materials and here for conversion. During the month of July, we see that we have additional units that are transferred from the milling department. We also have direct labor costs that are transferred and factory overhead. At the end of July, we see that our work in process is 1,100 units and that it's only partially complete. Throughout the whole month of July, we see that we've completed 15,500 units. So let's use all of this information to prepare a cost of production report. So the first part of the cost of production report is to really calculate all of the units. So this first piece here is all about units. We don't really care about cost at the moment. We have 2 sections. One is the units charged to production, and then this one is the units to be assigned costs. Let's start with our inventory and process. So our inventory and process as of July 1st, we say is 900 units. And we know that because we were given it in this box up here. We see that we have 900 units that is sitting in our sifting department work in process. So we list our 900 units here. Now we also want to incorporate any units that we have received from the milling department throughout the month of July. And we have 15,700 units, and we got that up here. We see that materials for 15,700 units were transferred into the sifting department. Now, the total units is simply a sum of those 2 items, the 900 and the 15,700. Now we need to calculate the units to be assigned cost. So we have our inventory in process, and we know that only 3/5 of it was completed. We know from the problem set above that we have 900 units total. We did not assign any units to direct materials beginning in July 1st because we assigned direct material costs for beginning inventory in the beginning of the process. And so since these items were begun in June, then you'll see that information up here. These are the costs for the direct materials that were incurred in June. So we won't add any units for direct materials for the month of July. But we will calculate the conversion units or the equivalent units that we'll use to calculate the conversion costs. So how do we do that? We know that 3/5 were complete in June. So that must mean that we're going to complete the other 2/5 in July. So I'm going to open up this calculation so we can look at it for a moment. You see that I've picked up the 900 units. I've multiplied it by 1 minus the 3/5. And there's a reason that I'm doing that. While it's really easy for you to see the difference between 3/5 and 2/5, sometimes when our percentages are much more complex, let's just say that you're told that the units completed, that it was 34698. Hold on one moment. Let me make that a little bit bigger. There we go. And you're told that that's how much has been completed in the month of June. Therefore, you have to calculate the rest for July. It's easier to just be in the process of saying equals 1 minus what was already complete. And let me open that one up so you can see the number. And once you're in the habit of saying 1 minus whatever was complete, then it's easy just to shift from simple math to a little bit more complex math. So my calculation was 900 times the 2/5. If we wanted to do it, if you wanted to see the actual calculation by 2/5, then you can see it here. It's 360. So those are the equivalent units. And as I mentioned over here, why are we seeing the 360? It's because the units were 3/5 completed in June, and those costs are captured in the information above, like you see it up here. This report is going to capture the rest of the work needed to finish each of the units. In this case, it's going to be 2/5. All right, now we need to calculate what was started and completed in July. And where do we get that number from? Well, we know that we received 15,700 units from the milling department, and we know that we have 1,100 units left in work in process. So we now know that we started and completed 14,600 units in the month of July. Again, we assign all material costs at the beginning of the process. So we have 14,600 units that we are going to calculate for, or we're going to use in the calculation for direct material costs. The same thing goes for conversion. We have 14,600 started and completed in July. But now we want to look at what was transferred to the packaging department. How did we get that number? Well, I added my 900 units that had already been in work in process, and I added all of the units that we started and completed. So that's 15,005. Now I can do a cross check because up here it tells us that we transferred or that we completed 15,500 units. Now, of these whole units, how many of these units do we associate with direct materials? Well, again, we only calculate direct materials at the beginning of the process, so that's going to be that 14,600. This other 900, the direct materials cost was captured above. For our conversion, what number are we going to pick up? Well, we're going to pick up the started and completed amounts, and we're going to pick up all the equivalent units for our work in process as of July 1st. All right, so now we know what we have transferred to the packaging department in July. Now we need to know what was our inventory in process at the end of July. We know that number is 1,100. We were given that information above. And we also know that 4/5 of those units were completed by July 31st. So direct materials, again, we assign all direct material costs at the beginning of the period. But for conversion costs, I want to take my 1,100 and I want to multiply it by the 4/5. And that gives me 880. And now my total units to be assigned cost is just a sum. There we go. So we finished the first part of the cost of production report. Now let's go to the next section. This is where we're going to calculate the costs per equivalent unit. So again, we want to start at the very beginning. The total cost for July for the sifting department was $33,755. Where did I get that information from? I actually got it from up here. It was given to us. Our conversion costs, again, it was given to us up here. Direct labor, factory overhead, we know that those are the two costs that we use for conversion. And now we need to look at our total equivalent units. We had 15,700, and we can see that from the equivalent units for direct materials. And we're going to pick up the equivalent units for conversion from, again, a previous calculation. So now I know how much I spent, and I know what my equivalent units were for both direct materials and conversion. My next step is to calculate the cost per equivalent unit. And I'm going to do that simply by taking my cost and dividing it by the number of units. For direct materials, you can see it's $2.15. And for conversion, you can see that it's 45 cents. All right, we're going to use these numbers in a later calculation. So here we go. I mentioned earlier that we have our inventory in process, and that we assigned all direct material costs at the time. We can actually see that up here. We're now pulling down the inventory in process for July 1st. All we've done is summed up direct materials and the conversion costs that were incurred during July or June. And that's that 2,061. Now we want to calculate all of the costs that were incurred in July. And we're simply going to take the direct materials costs that we were given and the conversion costs that we were given and sum the two of them together. You can also sum these three and you would get the same number. All right, so now the total costs accounted for in the sifting department is again just going to be a sum of these two items, the inventory in process on July 1 and then all of the costs that we incurred in July. All right, sliding down just a little bit further, we have our inventory in process on July 1st. This is our balance, and we know where that came from. We've seen it quite a few times. But now we need to complete or calculate the cost to complete that inventory that was in process, because remember, it was only 3/5 completed. So how do we do that? We take the cost per equivalent unit for conversion and we multiply it by those equivalent units of 360. That gives me 162. And you can see that I'm simply summing across the direct materials and the conversion. That gives me 162. Now I want to calculate the cost of all of my completed July 1st work. And that's simply taking what we incurred in June plus what we incurred in July for those 900 units and summing it. I'm going to slide down a little bit further. Now our job is to calculate the cost of all of the units that we started and completed in July. So we have our direct materials cost, which is our cost per equivalent unit, multiplied by what we started and completed in July. So these are the equivalent units that we started and completed in July. That gives us an estimated cost of $31,000 and some change. We're going to do the same thing with conversion. We're going to pick up the 45 cents, multiply it by the equivalent units. And then you can see that we sum this and it comes to $37,000. But now we need to know what did we transfer to the packaging department? Well, that's going to be the cost of the work that you completed, the work in process, plus everything that you started and completed in July. And we did the same thing up here with what we transferred to the packaging department. All right, last piece. This is the inventory in process as of July 31st. We're going to do the same thing. We're going to pick up the 215, but we're going to pick up the equivalent units of 1,100 for direct materials and 880 for conversion. So again, we're going to sum these two, and it's going to give us a total of $42,944 for the cost to be assigned by the sifting department. All right, so we finished the first piece. Now we need to journalize the entries for the costs that we transferred from the sifting to the packaging department. So we have our work in process for the packaging department, and we also have our work in process for the sifting department. We know that work in process is considered an asset. If we're transferring it from the sifting department into the packaging department, that means the packaging department is gaining this asset, which means they get the debit, and the sifting department is losing the asset, so they receive a credit. And we picked up the 40 because that's what we actually transferred to the packaging department. So it wouldn't be the 42 because that's the total cost, but this inventory and process is not ready for the packaging department yet. All right, now we're going to talk about the increase or the decrease in the cost per equivalent unit from June to July. So we have our direct materials and we have our conversion costs. I've laid it out with June. We'll talk about where we got these numbers from, and then July, you actually calculated these numbers during the problem set. So where did we get the information for June? It's been a long time since we've been to the top of this, so let's go back to the green section, and we can see that with the direct materials, they tell us that you have 900 units, and your direct material cost is $2.05. For conversion, the same thing. You have 900 units, and your conversion costs are 40 cents. So I pulled that information down here. I laid in the information from July, and then I just calculated the variance between the two. What this tells us is that our direct materials has increased by 10 cents per equivalent unit, and our conversion costs have increased by 5 cents per equivalent unit. So part of this whole this whole cost of production report, it's really about monitoring what's going on in your company and being able to take action earlier in the process to identify maybe some inefficiencies, some issues, or even identifying some best practices. So with the variance report, we have now identified that our direct materials have increased a little bit, our conversion has increased a little bit. So our next step is to find out why these variances are occurring. And by the way, 10 cents and 5 cents, it really doesn't feel like a lot, but when you are producing 20,000 units a month, 50,000 units a month, this can really eat into your bottom line. So this is the next step, is to determine what are some of the causes for the changes. So you may actually be in a period of rising material costs. If so, this is a flour company. You may have rising material costs because maybe there's a drought in the Midwest. Maybe the cost of transporting that flour from one point to another point has increased. So there are reasons that may be inside of our control, or they may be outside of our control. But this is one of the first places we start. For direct materials, We may have spoilage or inferior materials. We may have some theft, earthquake, wildfire, hurricane, flooding. There are so many things, again, that are inside or outside of our span of control. With spoilage, inferior materials, or theft, it's completely within our control. So we want to be able to identify those items and take action on them immediately. So for spoilage, maybe we ordered too much. We weren't able to mill and sift and package all of the flour or all of the wheat quick enough before it spoiled. For inferior materials, maybe we just recently switched suppliers, and maybe this new supplier is providing us with inferior materials. For theft, maybe we need to increase our security, whether it's physical security or digital security. Things that are outside of our control are the earthquakes and the wildfires, the hurricanes and the flooding. But we can still do things to mitigate the impact of these items that really do feel like they're outside of our control. But let's look at also the conversion. Our conversion cost went up. So for conversion, maybe we're giving people raises, which is always a good thing, but it does impact the bottom line. Maybe we have a new factory overhead rate, and that factory overhead rate has increased our conversion costs. Or we may have a new employee, and with the new employee, there comes this concept called learning curve. So learning curve essentially is the rate of a person's progress in gaining experiences or new skills. Sometimes people call it an experience curve. So it's commonly used for repetitive tasks, and it takes time to learn how to perform any task, right? However, people become more efficient and they become more accurate as the task is repeated. So, there are a few caveats associated with the concept. For example, people can only learn how to be efficient if they're taught the correct way to perform the task the first time. They also need to receive immediate feedback as they're learning this task so that they can correct their errors early on. And the biggest one is that the rules of the task really can't change that often. Every time you change the rules of the tasks, then you invite inefficiency into the process. So basically, the bottom line is that new employees really should not be expected to perform as efficiently as an experienced employee. If the task is relatively simple, like sorting boxes, people should become efficient pretty quickly, right? But more challenging tasks, such as, assembling sheds, means that it might take a new employee weeks or even months to become efficient. And then, of course, the biggest item I want to emphasize is that learning curve really should never be implemented with research and development or any other innovative careers, because true innovation begins when people start changing the rules. Innovation also, embraces this concept of collaboration and trial and error, curiosity and risk-taking, and all of those elements are really the opposite of efficiency. So I kind of got off track there, but for conversion, just having a new employee can decrease effectiveness and efficiency and increase your conversion costs. All right. Thank you so much for joining me, and I will see you in the next video.